Good morning, everyone. You're all very welcome to our Thursday morning preview. So today we do obviously have the all-important CPI figure coming out of the US this afternoon at 1:30 p.m. So it's what we're going to do in this video. We're going to take you through the data in terms of what the forecast is, the expectations, what obviously happened last month, just to describe that, because obviously the important effect that that had in the markets. And of course, looking at the price action in the broader elements. So we're going to look at the yield story, which has been developing for the last month or so, particularly obviously in the UK as well. We talked about earlier in the week. The dollar movements. So we're going to be looking at euro, dollar, and cable. We're going to look at gold as well from a commodity perspective. And we're also going to finish off by looking at all the broad-based indices as well. All right. So as we kind of get into the markets this morning, there's two sets of CPI data that we kind of take into consideration, right? One is, I suppose, the core and the CPI data, which takes into consideration every aspect of the economy. Now, we do also have a secondary set of inflation data, which is excluding food and energy. Now, for those who are new, food and energy has been kind of the greatest contributor for CPI over the last 9 to 12 months or so. And as a result, it's important to look at all of these pieces of information collectively to make a more informed decision. Now, today, if you are trading around 1:30, you'll want to be looking to get this information as quick as you can. So the likes of Live Squawk or an associated website like that, which would give you the news very, very quickly, is ultimately important. So at least that way, then you can make a decision very, very quickly. So that aside, if we look at the broad-based CPI for the year, including all aspects of or all metrics taken into consideration, we can see that last month now, the previous figure isn't circulating here, but last month the figure was 8.3%. Now, so what we've actually seen is 2 months ago we had 8.5. Last month, we had an approximation or an estimate or forecast of 8.1%. And unfortunately, last month, we came out with 8.3. So basically, what happened last month is markets were looking for a weaker or a stronger decline in the inflation data than actually what the market saw. And we actually saw a significant sell-off off the back of this data because markets were pricing in. Some institutions were even pricing in 7 prints. And of course, when we saw 8.3, we had that massive, very, very quick, very, very sharp sell-off in the CPI data. Now, this month around, markets are refusing to get too far ahead of themselves because if they're pricing in a weaker figure and that figure doesn't deliver, then they obviously have to go and try and unwind those positions. And that obviously means another sharp curtail of selling. So this month, you'll see this week alone how the indices have been very much in a holding pattern. The S&Ps, Nasdaq, Dow Jones broadly, all of them haven't done a terribly great deal since Monday. Now, the reason for that is because markets are refusing to get too far ahead of themselves just in case they have to unwind. Now, for this month, we have another forecast of 8.1%. So last month was 8.1, didn't deliver. This month, it's now 8.1 again. Now, if it's a case that we break through 8% and we start to see 7.9, 7.8 coming through, now obviously, who knows? We're obviously going to see that to be good for the markets, right? Because that means basically, right, we didn't see that much of a decline last month, but we're starting to see more of a decline this month. So what we want to see is the weaker the inflation figure, okay, the better it is for risk assets. So what's our risk assets? Our risk assets is anything against the dollar, essentially. So our stock markets, our equity markets, our indices, gold, euro dollar, Aussie dollar, Kiwi dollar. So anything associated with those asset classes, if you want to be buying those asset classes, so buying euro dollar, buying gold, you would want to be looking for a weaker figure. If the figure comes out higher than expected or as expectation, the likelihood is we mightn't see that much of an effect. So obviously higher CPI figures is negative for risk assets. A lower CPI figure is good for risk assets. So it's just about being aware of that dynamic. In all other retail data, it's the opposite. Now, when we look at the CPI data for excluding food and energy, we can see obviously month on month, they're looking for declines as well. So marginal moves there. Now, the CPI excluding food and energy prices have gone up in the last month or so off the back of the OPEC oil cuts. Now, again, for those who are looking at food and energy, you also have to factor that into consideration. So we've seen OPEC, not last weekend, the weekend before last, looking at cuts in oil production up to 2 million barrels a day. And as a result, we've actually seen the oil markets actually rally quite significantly in the wake of that. So we've seen fairly significant movements in the oil markets, and that's one of the rationales that's why we may not see CPI figure coming down as much today, because the oil markets have been kind of fairly tepid, fairly bid to the upside. So just be obviously mindful of that as well. Now, of course, if we're not seeing a 7 or a 7.9 or an 8% print today, or even 8.1, the likelihood is that this inflation story is coming down far slower than what market participants expect. If it's coming down far slower than what market participants expecting, we're going to see the Fed continue having the higher interest rates for a lot longer period of time. And we've seen, particularly in the UK over the last couple of weeks, having higher rates and how that affects yields and government liabilities and overall borrowing, how that can become a very, very problematic issue. So just be kind of wary of that as well, that it's not just we're looking at CPI today, we're actually looking at the CPI figure and how that is affecting the mindset, the thought process of the Fed in the background. And again, as we look towards November's interest rate meeting, which is now just a couple of weeks away, we obviously have to be kind of conscious of that as well. All right. So it's just important to be kind of aware of all of these elements to take into consideration. As a long-term investor, we're seeing stock markets down 25, 30%. So we're starting to see a lot of value coming in from a longer term perspective, that kind of 6, 9, 12, 15-month perspective. We're starting to see value coming in. But from a short-term perspective, we could see a little bit more downside. So it's just all about minimizing the downside exposure, having that idea of capital preservation, whether you're funded or you're working on your own personal accounts or whatever it is. Okay, so that ultimately is the most important element. Now, we do have jobless claims coming out, but from my perspective today, from a market perspective, the bigger data will be around CPI. Okay, and that is ultimately the one to watch today. Now, when we look at the price action broadly speaking, let's just take a look at the price action broadly. Now, first asset class I'm going to look at today is the tenure yield. So the tenure yield we've seen very, very quickly that it has run up alongside the dollar over recent months, over the last year or so. And of course, we're seeing the exact same story and situation in UK as well, where markets have just been completely out of control in terms of the yield. Now, we have seen the yields curtail at 4%. If we see a stronger CPI figure, kind of 8.1, 8.2%, maybe even 8.3, the likelihood is the yields is going to continue moving higher. So obviously being aware of that in the back end is a potential downside risk. If yields go higher, the likelihood is dollar goes higher. And that then becomes the interesting element that, right, if it's a case the markets do that, now, obviously, that would mean that dollar would have to break through this short-term area that we're looking at here around 113.50, and ultimately have a run or have a retest of those associated highs that we saw into September's month end at around about 114, 115. Now, if that's to happen and we see that stronger dollar impulse, then the likelihood is your euro dollar is going to continue selling off. The likelihood is strong revision or revisit of the lows. And you'd also see a fairly similar story in cable. You'd probably see the cable story unwinding as well, continue to move short. So obviously at this moment in time, markets are very, very tricky, very, very choppy, because there's so much fundamental data coming out. It's not just a case about plotting a line on a chart and selling off that particular level. There's a lot more that goes into the back end, and it's important to understand as much of this information as possible, because the more you understand, the better the decision-making process is. And that's ultimately what we're trying to do here, is trying to give as much information to traders so that they can make the best decisions that they possibly can. Now, again, if we were to look at a technical aspect of this, and I know I'm not looking at solely technicals today, I'm looking at all aspects, we can see how the price action is curtailing itself here at 113.50. So if it's a case that the CPI figure comes in less than expected, right, and lower, okay, like for example 7.8, 7.9, then the likelihood is you're going to see this DXY drop off. You're going to see a weaker dollar. Okay, if we get a weaker dollar on the DXY, you're going to see euro dollar moving higher. You're going to see cable moving higher. You're going to see gold, which is just loading, moving higher. So it's just all about recognizing the elements of consideration, how these markets can move. Now, at this moment in time, if you ask me, am I bullish or bearish on the CPIs? It's very, very, this is probably one of the most difficult months to call, given the backdrop of what happened last month, markets trying to get ahead of themselves. And obviously we had that unwind. The increase in oil prices over the last 3 weeks or so, 2-3 weeks or so, from, I suppose, $75, $76 a barrel to up near 90, 92. So I suppose when we factor these things into consideration, we can't get too ahead of ourselves, because Markets love a bit of optimistic news, but again, if that optimism isn't delivered or isn't, I suppose, fed upon, then you will see those unwinds become very, very quick and very, very clear. So me personally today, I'm very much kind of waiting to see. I have my bias, I have my scenarios drawn up, and then it's a case of once the information comes out, I'll be making decisions off the back of that. If I can get a position and if I can get an entry in, great. If I can't, that's okay too. It's all about capital preservation, minimizing the downside risk exposure. But if you find the opportunities that you're looking for, being able to execute on those as well. So this is why the likes of having clear liquidity, execution is obviously really, really important on these fills, because obviously when the algos get involved, you want to be getting in as quick as you possibly can. So I've seen plenty of examples of exchanges, of which I won't name, retail brokers who continually freeze up during kind of high volatile news events. And because why? They don't want traders entering in the markets and trading against them. And that's a simple fact of the matter. So again, as we said, higher inflation figure today is obviously good for the dollar. A weaker inflation figure is obviously good for risk assets, your indices, etc. All right. Now, when we look at gold has been, again, very choppy this week. We had that sell-off into the tail end of last week, particularly off the back of NFP. Markets has been very subdued here between kind of 1660 and 1680 all week. So we've seen a $20 range all week on gold. Not really too much happening. Par for the course, really, because no one's getting ahead of themselves. No one's kind of trying to get in aggressively or whatever. Now, unless there's some sort of leak coming in, I would expect the markets today to remain fairly range bound until about 1 o'clock, 1:15, 1:30 today, till we start to see some of those moves playing out. Okay. So that's kind of what we're looking at there. I'm not really looking at I do have technical levels. I have an order block area here on cable at 111.50. Euro dollar is just fairly flat and consolidated. I'm not really looking at euro dollar at the minute. I think cable would be a nicer setup today. Personally, there is movements obviously in Aussie and the Kiwi as well. So I suppose it's just all about finding that, I suppose, common ground. If you can get price action levels integrated with the scenarios that you're looking for, it'll put you in a much stronger position overall as well. All right. Now, second to that, we want to obviously make sure that we look at the other set of asset classes. And what's the other set of asset classes? The other set of asset classes are the indices. Now, broadly speaking, just going to leave my thing over there out of the way. We can see that the, I suppose, overall approach for markets is that I suppose, risk assimilation has always been to the downside for the last 9 months. Anytime a little bit of news comes up, it's a case of short-term relief rally, then it's a case of the next phase of bearish price action, and we just seem to unwind. Now, if we look at the S&Ps as the main example, right? If we look at the S&Ps just for a second on the higher time frames, I was looking at a 30-minute time frame last night just to kind of assess the shorter term price action. Not really too much has happened, right? We've seen consolidation. We had the manipulated move. We've had the pullback to the upside. We had the unwind on NFP last Friday, which was the catalyst for this downside instigated move of price action. So like the markets could move either way today. And I think it's important that, particularly with CPIs. Now, look, it would be absolutely amazing if this was a smart money play and we took lows, we took highs, we flagged back down and we just started rallying on. But we just have to be conscious of the CPI, because the CPI could very easily hammer this lower, do a stop hunt, and then maybe be the architected move. So just being aware of that. I suppose when we look at the order flow, since I suppose Monday, very, very clear bearish order flow into this condensed area of interest here between kind of 35.65 and 35.70. Bearish order flow consistently being created in these indices, and markets is creating that kind of bearish order flow. So I suppose the run up today would be that if the inflation figure comes out weaker than expected, this is just going to fly. I think this is just going to fly. We're probably going to rally, and you're probably going to see a weekly close somewhere up around 3700, 3720. This area up here being a weekly close option is quite a probable area. Now, I suppose when you integrate the price action structure, I know people trade technicals, people trade technical patterns, but you want to be looking at more than just the patterns. You want to be looking at the price action, how the markets have instigated liquidity hunts over the last few weeks. And of course, using the news. The news will be the catalyst for this move. So it's just about being aware of the architect that's kind of being created and developed at the minute. Now, we've seen a nice rally this morning off this 35.70 level. But sure as hell, if it's a case that this CPI figure comes out higher than expected today, this area here is going to be completely obliterated, and we're going to continue selling off. So just be kind of wary of that. Similarly enough, is again on the Nasdaq. If we look at the Nasdaq, it's a very, very similar situation. Broadly speaking, if we look at now, Nasdaq is probably performing a little bit less in comparison, because what we've actually seen is we've seen consolidation. Lows been taken, highs been taken, the flag back down. This area here around 10, I suppose this order block level here at 11,000 didn't hold. We've kind of come into this negative flag structure you can kind of see here. Again, similar to kind of what we've seen in the S&Ps. Order flow, order flow, order flow, order flow. So from my perspective, if this is going to break higher, looking for that impulsive move higher, looking for some sort of unwind, short-term kind of pullback to kind of clean out the rest of the liquidity, and then look to see if there's any kind of continuated move to the upside. So that's kind of what I would be favoring today myself. If you can get in even earlier off the CPI and you're trading off short-term news or fundamentals that aligns with your strategy or plan, that's also fine. At the end of the day, it comes down to what you see, what you perceive, and how you react. But as we look at it at the minute, again, similar on the S&Ps, Nasdaq, very, very clear order flow, very, very clear bearish flow. Now, this is setting up for kind of this impulse of move. But again, if the inflation figure comes out higher than expected, the likelihood is that this area here is probably going to be broken, and we're going to see a continuation to the downside. So it's just about looking at both scenarios and being able to make decisions off the back of that. Okay, that is one of the golden rules, that you obviously have your risk, you have your mindset, you have your trading plan, and you're able to execute off of clear rationality to do so. All right. Last but not least then is, I suppose, our last couple of indices. So we've got Dow Jones, similar scenario. So Dow Jones, if we look at the price action here, again, consolidation, you can see how we've taken those, we've flagged up, we've come back down, we've actually cleaned out this order block level. So if you had taken a setup here of this kind of 4-hour area, excellent call. That's a beautiful play off of 29,000. We have actually seen a short-term consolidation within this move. So what we've actually seen is a move within a larger move, which is actually quite interesting. So if we look at the 1 hour and dissect the price action here as well, you'll see how we've got another consolidation, another move lower, another move higher, flags back down, doesn't quite take the low of this, but this is what we'd call a second run, or I suppose a double mitigation of the supply side imbalance that we're seeing on the order flow. Now, again, this is quite positive. This is quite a positive sign. So again, you can see how these moves are making themselves a little bit more prevalent. So the fact that you've got that larger move inside the smaller move, it's quite interesting. But the news today will drive this higher. So you can guarantee that if this is coming in at 7.7, 7.8, 7.9, you're probably going to see if we're breaking an 8 print, especially, you're going to see this probably at 30,000 by the end of today, at the least probably. So it's just about kind of being aware of that and being conscious of the price action. And as I said, being able to make informed decisions. But there's some really nice setups developing here in this one. Now, again, if I look at DAX, slightly different scenario developing on the DAX. I suppose DAX has been obviously very, very bearish over the last few months, just kind of continually creating that bearish order flow. We had new lows. We had a pullback temporarily above 12.5. Markets has come back into this 12.1 level. Now, I suppose when we dissect the price action here, and I'm just going to remove this arrow for a moment, we can see consolidation. We've got the hunt, initial impulse, price action returns back into the range, breaks out to the upside, creates this short-term, I suppose, broader lower high in this order flow move, and we've now come back into this structure here. So it's a case of wait and see, does the price action recover from here? Now, we haven't met the order block here at 12,000 on the 4 hour, but we are in a kind of a period of condensed price action. You can see it here, price action holding just narrowly underneath 12,100. Now, if I go to 1 hour chart, things obviously become a little bit clearer. Why? Because we can see the kind of the lows, the break of lows, price action reverts back up, bang, comes back into this region up here, flags back down, and there's now this pattern here. So if I'm looking at this from a structure perspective, I'm seeing broader manipulated move here. And we can obviously see profit taking on this impulse, flagging back down into a 61.8. So like there's multiple kind of like anti-layers or layers you can look at. You can look at 61.8s, you can look at 786. A lot of people do that as well. Some people look at 70 or 7 or 71s. So I suppose it all comes down to you personally. But I suppose from my perspective here, we are getting obviously clear reaction off the 61.8. Now, whether we get into this lower echelon area here where the order block is in the 4 hour, let's just wait and see. And of course, been interesting, but there's been a strong bias this morning. Like we've tried to break lower this morning through this area. Price actions rallied back into these local highs here. Again, we're creating that bearish order flow here. Even here again, we've equal lows. We're coming back up again. So price action now is very much kind of moving laterally rather than moving sideways, I suppose, in the last couple of days or so. So just being kind of aware of that as well. Now, I suppose last but not least then is the FTSE play very, very quickly. So FTSE play has been very, very interesting. I suppose when you look at the broader perspectives, just going to go out to the weekly for a second. Massive price action level here. 6,800 is just really supreme. So you can kind of see how this is playing out. When we look at the daily structure, very, very clear bearish price action on the daily. So we had that kind of orchestrated move to the downside. We had that relief rally back into the order block zone on the 4 hour. If I go to the 4 hour, you'll see that now in a second. Impulse down structure, flags back up, rejects it very, very cleanly, and then sold off all the way back to the 6,800 supply level. Now, when we look at the price action over the last few days, again, similar to the other indices, fairly consolidated, tried to break through 6,800, very, very quick snap back. Took the highs of the liquidity here. So you can kind of see here, there's a lot of liquidity. Okay. We've actually obviously broken through. We've stop hunted. Notice how as immediately after we've broken through and stop hunted the liquidity and taken stops. The markets have rallied all the way back down, or sorry, not rallied, declined all the way back down into these lows here at 68, 68.50. Now, when we look at the price action yesterday, we can see how we've been anchored lower as well. We've been kind of sliding kind of into this morning session. 8 o'clock, we did have an initial sell-off. Again, is this a hunt? Again, if you're looking at it, you're seeing order flow. Is this a hunt of stop hunting? Well, let's just wait and see, because you're seeing that very, very sharp initial downside move. Price actions recovering very, very quickly. And now it's trying to take out the highs that was kind of seen into last night's US close at around 68.40, 68.50. So if it's taken out 68.50, that's going to be a positive thing. So I suppose when you're looking at the order flow here, you've got obviously move into move. We've obviously tried to take this out. So we just have to be kind of conscious that let's just wait and see. Could this fly up? Absolutely it could. We've seen how important the 68 level is, 6,800 level is, should I say, or we could just completely break through. So I suppose we just want to have as clear a price action as possible so we can make the best possible decision as we can. Now, that's pretty much it for the CPI data. I just want everyone to be safe today. Don't over leverage yourselves, because these markets are very, very choppy. Make sure you use stop losses and trade safe. And of course, best of luck. If you are in trades today, I hope to win. I hope to do well for yourself. And obviously, have a good one as well. All right, guys, we'll be back tomorrow. We'll do another one tomorrow just to wrap up the week. And ladies, and of course, we will all see you then. All right, have a good day.